Good afternoon, everyone, and welcome to this Nadex webinar on Nadex products and tools for short-term price action. I want to welcome everyone. Thank you so much for joining me today. My name is Todd Rich. I am with Nadex, and we have had thousands, just thousands and thousands of new participants and new traders in our markets. And we're finding that these sessions are useful and they're scalable. We got a lot of folks on today, and I'd like to cover, I'm going to start at the top of the story. I'm going to do a little bit on who is Nadex, just for a few minutes, because it really plays into the products that we have and the tools that we've got available, but how everything is really designed for short-term price action for retail traders. So I'm going to do a little bit of that and then we're going to get into the products. And I would like to spend a little bit more time today on the tools. I definitely want people to become familiar with what tools are available to help you access these markets and to analyze these markets. Before I get into, Before I get into the agenda for today, I do need to share this disclaimer because our webinars, as are all of our webinars and educational events, are sponsored by our compliance department. Go Nadex Compliance. Trading involves risk and may not be appropriate for everyone. Any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything I say today as a buy or sell recommendation. I'm doing this for your educational purposes, and that'll be even more abundantly important when I get into the tools and we're playing around with the platform. I'm going to be clicking on things. I don't want you to take anything I say today as a buy or sell recommendation. All right, with that, before I start, I always like to put this up front. If you've got any questions for Nadex, we are here to help. If you're having any challenges, whether you need additional clarity on our products, on the platform, on your account, please email us, customerservice@nadex.com. If you're having any challenges, the only way we can help you is if you ask. So please reach out to us. I'd also like to mention there's a Trustpilot link. If you could take a few minutes and give us a review on Trustpilot, it would be greatly appreciated. We like people to share their feedback and share their experience. So if you can, please go to Trustpilot, look up Nadex and give us a review. I'm also going to mention our social media. The one really important one there I'd like to single out is YouTube. You should go to YouTube, or I recommend that you go to YouTube and subscribe to our channel. We are publishing fresh content every week. And in fact, every morning, 8:45 a.m. Eastern, 7:45 a.m. Central, we do a quick analysis for 15 minutes on what's going on that day and where there could potentially be hot spots in the markets. The recordings are all posted up there as well, so you can always go back and look at them if you're not able to join live. But you can go to our YouTube channel, subscribe to it, and you can even set reminders for those sessions, and you can catch them, for 15 minutes, a half hour, 45 minutes before the open in the US, the equity open for the retail traders. It might point you to hot spots where you might want to look, and we do a little analysis, technical analysis on some charts, just to give you some ideas on where you might want to be focusing on where there might be volatility or movement in the market. All right, the agenda for this session. I mentioned I am going to spend a couple minutes quickly just talking about who is Nadex, and then this is products and tools for accessing short-term price action. I am going to go through the three product classes we've got. Most people come here, they're looking for binary options. Fantastic product. I am going to go through binary options at a high level just so to make sure that everyone's on the same page and we're all together on what are binary options. I'd like to also talk about knockouts and call spreads. A lot of people aren't familiar with what those are. I actually think knockouts are our most intuitive product, and they're kind of cool the way they're designed, and we'll go through knockouts and call spreads as well. And then we're going to go through examples. I'm going to then jump over to the platform, and not only am I going to show you on the platform binary options, knockouts, and call spreads. I'm also going to spend a little time on the tools, particularly our charts, on how you can, all the little functionality that we've got on our charts to help people, because that's how a lot of folks trade Nadex markets, is they'll use technical analysis, and we've got some things on the chart, and you could trade right from the chart as well. So I definitely want to go through that, and I want to spend a bit of time on it. So let's get right into it. The first up is, who is Nadex? And if you're not aware, Nadex is actually an acronym. It stands for North American Derivatives Exchange. And the important takeaway here is Nadex is a regulated marketplace in the United States. Now, you can access Nadex from outside the United States, but it's important to know that we are regulated in the United States by the CFTC, the Commodity Future Trade Commission. If you're not familiar with the CFTC, in the futures side of the world, they regulate all of the large exchanges in the United States. So in the equities world, you probably have heard the SEC, the Securities Exchange Commission. They regulate all stock trading. The CFTC is for futures, the Commodity Future Trade Commission. That is the regulator for Nadex. Now, the reason I mention that is when it comes to binary options in the United States, right now there are only two exchanges that are regulated that are operating in the United States. The other one is a very small exchange that doesn't trade very much. It's got weather contracts. So Nadex is the premier binary options exchange in the United States that is regulated. Now, can you access other binary option providers from the United States? And you're actually not supposed to be able to, but with the internet, you can certainly put on a VPN and access offshore providers, and they would be unregulated. And when I say that, if you were to have a challenge or a problem and you wanted to have some sort of recourse with an unregulated exchange, I would say caveat emptor, buyer beware. There is no place for you to go to have recourse. With the CFTC, we are regulated. It is the same regulator that regulates the very large futures exchanges in the United States, like the CME, the Chicago Mercantile Exchange, or even ICE, the Intercontinental Exchange, ICE, who owns the New York Stock Exchange. They bought the New York Stock Exchange. So we are regulated, and we have to adhere to all rules, regulations, laws in the United States, which means access to markets, how we handle accounts, how we handle personal information, all of that. We are regulated, and we have to adhere to certain obligations. And that's important, particularly when you're looking at the world of binary options. All right, now, what is Nadex? Nadex was established, built, created specifically for retail traders, right? And when I say, well, what does it mean having a contract designed specifically for retail traders? All of our products, it doesn't matter if it's a binary option, a call spread, or a knockout, it's got a low cost to entry. And every one of our contracts has very clearly defined risk so that you know what you're getting into before you get into a trade. There are no surprises. Unlike other futures exchanges where you might have initial margin and maintenance margin and margin calls, none of that exists at Nadex. These are very small contracts. The notional value, the total maximum notional value of all of our binary options is $100. So we offer access to the markets. We democratize it. You don't need thousands of dollars to access price action. You can do it with hundreds of dollars, and that's what Nadex was designed for. Small retail contracts with very clear, defined risk, defined reward, no surprises. You know what you're getting into up front. So, because you hear horror stories, you're not going to have those surprises, because generally a surprise in the trading industry is something that's bad, that's negative, that you weren't expecting. And with Nadex, it's everything is known up front. And we offer this variety of products. And so let's get into those different products. Let's define them. And then we're going to go look at them on the platform and we're going to see how they work and what tools you have to analyze and look for opportunities. So let's start off with binary options. And by the way, there is a questions box on there. If you've got any questions as I go, please type them in. I will try to monitor that and answer them as I go. But if not, I will take a peek at the end and try to make sure I go back and answer any questions so that everyone gets their questions answered. If for some reason I totally miss, always feel free to email customer service and ask your question. So what is a binary option? A binary option is a short-term defined risk reward contract. And by the way, when I go through this example, you're going to realize you already know what a binary option is. Now, it is a prediction. It's a statement, it's a prediction, and it's got three components. What are the three components to the prediction of a binary option? There's a market, there's a condition, and sometimes that condition is called a strike price or a level. Fancy words, I just like to call it a condition. And then there's an expiration time. So a market, a condition, and a time. We offer binary options on equity indices, whether they're US, we offer binary options on global equity indices as well. We offer binary options on foreign exchange. So all the major Forex pairs. We offer binary options on commodities like gold and oil and silver and natural gas. So there's an underlying market, there's a condition, and the condition for a binary option is always going to be, is it greater than? Is it going to be greater than? Will it settle greater than? That's it. Market, gold, will it be greater than? And then there's an expiration time. And we offer something that's very different than other binary option providers. We offer 5-minute binary options. We offer 20-minute binary options. We offer 2-hour binary options. We offer daily ones. We offer weekly ones. So you've got a variety of choices to choose from. We've got a variety of underlying markets. The condition, we are going to provide you a bunch of different conditions, not just one. Other binary option providers, is it going to be higher from right now? Yeah, you can do that with binary options at Nadex, but we also offer, is it going to be higher than a price higher? Is it going to be higher than a price lower? There's a lot of different choices. And that is so that you can choose the risk reward profile that fits your trade. And then there's a time. We offer a variety of times. And I am going to go through an example of binary options. Now, the interesting thing also that differentiates Nadex is you can both buy or sell these binary options. So you're not just limited to only buying. You can also sell them. And I'm going to get through that in a second. And binary options will trade in a range between 0 and 100. In the end, they'll either be 0 or 100, and I'm going to get into that in a second as well. I just want to tee up the basic concept that it's a prediction with a market. You choose the market. A condition, you choose the level or the condition that you want, and there's a time, and you can choose the time frame that you want. So in the end, what it comes out to is it's a true or false prediction. Either the event happens or it does not. That is why it's a binary option. So let's use an example. Let's use gold for an example. And the question can be, all right, the underlying market is gold. And then the condition is, will gold be higher than? And you're going to have a variety of choices, prices. Let's just say $1,700 an ounce, so just 1,700. Will gold be higher than 1,700 at the end of today? That's a binary option. Will gold be higher than 1,700 at the end of the day? And at the end of the day, it's either higher than 1,700 or it's not higher than 1,700. And if it's true, the option goes to 100 and it settles. And if it's false, the option goes to 0. Now, you can think of that price as roughly reflecting the probability at that moment in time that the event will be true. So let's just go through an example. Let's keep with gold. Will gold be higher than 1,700 at the end of the day? If gold were trading right at 1,700 right now, there would be an equal probability that gold would finish above 1700 or not finish above 1700. And so the price of the binary option would probably be around 50, meaning a 50% chance that it will be true. So it's also got a 50% chance then of potentially being false. Now, the cool thing about our binary options is that number, while it represents or reflects the probability at that moment in time of the event being true, it is also the dollar amount of the contract. Now, you don't need to do any of the math. We can show it to you on the order ticket. But if you bought a binary option for 50, all right, there's a 50% chance that this is going to be true. You bought it for 50, you risked $50. Now, where could it go to? You risk 50, and if the statement is true and there's a 50% chance of it being true, if it's, as long as it's above 1700 at the expiration time, it could be at 1701 cent, it could be at 1701, it could be at 1800. As long as it's above, the statement is true and it goes to 100. It's 100% probability because that's where it is. It was true. Means it also settled at $100. You risked 50, it went to 100, you made 50. You had even money. You had 1-to-1 odds. You risked 50 to potentially make 50. Now, if you bought it and it settles below 1700, actually at 1700 or lower, so the statement is false, it wasn't higher than, it's got to be higher than, it's going to go to zero. All right, now you bought it at 50 and it went to zero, you lost your $50. So you can choose a level that suits what you think is going to happen. Now, if gold were trading right at 1700 and the question were, will gold settle above 1690 at the end of the day? Well, it's already above 1690. That might be trading at a 60% probability. Right? It could, because it's already above that price, in which case, if you bought it, you'd have to pay $60 to potentially get 40 because it went to 100. Now, if you thought gold were going lower, all right, it's trading 1700, and is it going to be above 1690? And you thought, no way, this thing's going down and it's going to settle at 1690 or lower, you can sell it. And you can actually sell a binary option. If you sold it at 60, all right, you sold it at 60, the most you could lose is if it went to 100. So you'd be risking $40. You sold it at 60, it went to 100, you lost 40. But if your prediction is correct and it drops below 1690 or 1690 or lower, it would settle at zero and you'd make $60. So you'd be risking 40 to potentially make 60. It always adds up to 100. We do that math for you on the order ticket, but it's important to understand that really what you're looking at is a probability. You're looking at a probability of that statement being true at that moment in time as determined by the marketplace. Now, I am going to say, like other traditional listed options, if you are familiar with them, time and volatility will factor into the price of a binary option. So if there's a lot of time left in the day, early in the day, and there's a lot of time left, well, there's a lot of time for it to go up or down. I don't know where it's going to go. That will be factored into the probabilities. Very, very late in the day, at the very end, if there's only minutes to go, there's less of an opportunity for it to move around. So the probabilities will reflect that as well. And volatility will impact that. If something is moving all over the place and making wild swings, that will be impacted in the price, and the marketplace determines that. That is something we will get into, but ultimately, we have a central limit order book. That means anybody can put a bid or an offer. So you can put a bid price anywhere you like. You can put an offer price anywhere you like. And it's everybody who's trying to buy and sell makes up this order book where people ultimately, if they match up on a price, then a trade will occur. So binary options, it is a prediction. Is it going to be true or not? You're trading a probability. Now, I'm leery to use this as an analogy, but I said you probably are familiar with this concept. I don't want to compare binary options to sports gaming, but those are binary options as well. Will the Bears cover the spread against the Packers, yes or no. Right? So that's a binary option, and either it happens or it doesn't happen. Will gold finish above? Will the Dow Jones finish above? Will the Euro US dollar Forex pair finish above one spot 17? And again, it's the time frame in the next 5 minutes, in the next 2 hours, and then at the end of the day, at the end of the week. So you can choose all of that. That is a binary option, and it is our most popular product. And the fact that they're only $100, so you're trading something with for less than $100. I mean, you're looking at different probabilities. Generally, people trade between 20 and 80. When it starts getting below 20 or above 80, they're low probability trades or high probability, but it moves around. But it's interesting, and you're risking less than $100, and you can access price action. And when I show you an example of binary options, and I am going to show you a 5-minute binary option where you will see price moving around dramatically, it will give you an understanding of how those probabilities move and how it creates opportunity in the market for retail traders looking for short-term price action. And if you want hyper short-term price action, 5-minute binary options might be for you. But if you don't need that wild swinging around, you can always choose a longer-term binary option, and I'll explain that as well. Next, I want to keep moving along because I do want to cover these, and I do want to then get to the platform. I want to spend some time there. What are knockouts? Now, knockouts, I find, are our most intuitive product. It is what we call a Delta One product. What does that mean? That means you are actually trading the price of the underlying. Whatever it is, you're trading the price of it. So a Nadex knockout is a contract, and it trades within a predetermined price range. Okay, and that price range has 2 levels. One is called the floor, that is the lower price level. The other is the ceiling, the higher price level. So the value of the contract, what you're actually trading, is the price of the underlying market. So let's go back to gold, for example. If I were trading gold and if it were around $1,700 an ounce, I would just trade the price of $1,700 an ounce. And just like any other market, if I thought the price of gold were going higher, I would buy it. All right, so I think gold's going higher, I buy it. Now, this is a concept that's a little unclear to some folks, is if you thought gold were going lower, you can actually sell it. And people say, how can I sell something I don't own? What you're really doing is you're simply taking a short position on the price of gold. I think the price of gold is going to go down, and I sell a price level. And if it went lower, I could potentially profit. And if I sold it, but if I sold it and it went higher, I would potentially lose. And if I thought gold were going higher, I could buy that price level. And if it went down, I would lose. People are familiar with that. You buy something, the price of it goes down, you potentially have losses. But if it goes up, you potentially win. And a knockout is going to trade between these predetermined price levels. It'll trade between the floor and ceiling. Now, how does a knockout work? And it can expire in one of 2 ways. All right, by price or by time. All right, now what does that mean? Let's talk about price triggered settlement first. Now, you're trading the price of the underlying market. In the example, we're trading gold. If gold were to touch either the floor or the ceiling of that contract, you would get knocked out of the trade. The contract would settle. That is why they are called knockouts. If you buy a knockout and the price goes down and touches the floor, you are knocked out of the trade. If you buy a knockout and it goes up to the ceiling, you would get knocked out of the trade. And really what ends up happening is you've got predetermined levels that it's sort of a baked in trading plan built into the product. If you thought the price of something were going higher, you could buy it, and you know that your risk is if it touches the floor. And if it goes down and touches the floor, the difference between where you bought it and when it touched the floor would be your loss. And it's sort of a stop loss. It just stops you. You bought it, you thought it was going to go higher, but it went down instead. It touched the floor. You get stopped out. You get knocked out of your trade for a loss. Now, it also has a profit goal. If it goes up and touches the ceiling, you'll get knocked out of the trade and experience maximum potential profit. And if it kept going higher, you couldn't make any more because it hit the ceiling. What it does is it really forces a retail trader to think about how much they're willing to risk for what potential reward and put some type of parameters around that so that it makes you a little bit more of a disciplined trader. Some people have a very difficult time stopping their losses or letting their profits run or having a profit goal. It gets to that level and knowing when to say thank you very much, I'm going to go ahead and take my profits and move on to my next trade before it turns around and turns a winner into a loser. So a knockout, it's a delta one. You are trading the price of the underlying, and you've got clear defined knockout levels if you're right or if you're wrong. If it touches, and let's say I think gold is going lower. I want to sell gold. I think this is crazy. I think the price of gold's too high. It's going to go down. You sell it, and now if it goes up and touches the ceiling, you would get knocked out for a loss. You were wrong, it went up. If it went down and touched the floor, you would get knocked out for your maximum potential profit. And we offer multiple knockout ranges so that you can choose the risk reward that makes the most sense to you. If you're selling, you might want to choose one with a closer ceiling so that if you're wrong, it goes up, you get stopped out sooner. If you're buying, you might want to choose one where it's closer to the floor so that if you're wrong and it goes down, you get stopped out sooner. But we offer, generally speaking, 4 knockouts for every product, and you'll have 4 different ranges where you can find your comfort zone on risk versus reward. Now, the question then comes up, what happens if it doesn't touch the floor or the ceiling? And that's when you come into time-triggered settlement. And time-triggered settlement, knockouts start off as a weekly contract, and they'll be knocked out over the course of the week. But if you come to the end of the week and you bought or sold a knockout and it didn't touch the floor or the ceiling, it will eventually settle at a time. It will expire at a time. That's a time-triggered settlement. And at that point in time, your profit or loss, because you never got knocked out of the trade, your profit and loss would be the difference between where you bought or sold it, because you bought or sold it, and where it ultimately settled. So if you bought it and it went up a little bit, you'd have a partial profit. If you bought it and it went down a little bit but didn't touch the floor, you'd have a partial loss. And inverse, if you sold, you sell a knockout, you think the price is going lower, and it went up but didn't touch the ceiling, you'd have a partial loss. And if you sold it and it went down but never touched the floor, you'd have a partial profit. So a knockout, I think, excuse me, I was taking a sip of coffee here. A knockout, delta one, you are trading the price of the underlying, and that what you see is what you get, and you're trading the price of the underlying, and you've got clear knockout levels where it will knock you out of the trade as essentially a stop loss if it goes against you, or as a profit goal if it goes your way, whether you're buying or whether you're selling. And when you get into the trade, again, you have very defined risk. You know exactly what you could potentially make and what you could potentially lose. It's calculated for you on the order ticket, so you don't have to do the math. You can actually see, if I were to do this, what would I potentially be risking? What could I potentially be making? All right, now let's do a quick cover of call spreads, because call spreads, if you understand knockouts, call spreads are super easy. And it's interesting how a lot of people start with knockouts because it has very, very distinct levels, and it's concrete, and it's delta one. Call spreads are similar, very similar to knockouts. It is also a contract that has a predefined range, and that also has a floor and a ceiling. All right, just like a knockout, a call spread's going to look very, very similar. Now, the catch is the value of a call spread will move in line with the underlying market, similar to knockouts, but not the same. Not the same. And why is that? Call spreads differ from knockouts in two ways, and these two ways make them important, distinct distinctions that you definitely need to understand. The first of which is a call spread only settles at expiration. All right, there is no price triggered settlement. A call spread will only settle on time at the end of the contract. That is important. So even though there's a floor and a ceiling in a call spread, if it touches the floor or ceiling, I am not knocked out of the trade. All right, that's important. Now, if I buy a call spread and I want it to go higher, but it goes lower and it hits the floor, on a knockout, I would be knocked out. Right, that's it. I'm out of the trade. I experience maximum loss. On a call spread, I'm not knocked out. I've got time to be right. It could potentially come back higher and go higher. So even though there's a floor, I've got optionality. So I'm not knocked out for a loss. Now that also works for a profit. Okay, so if it goes up to the ceiling, and I would have, in a knockout, I would have experienced maximum potential profit. And if I had gone away from my computer and I wasn't paying attention, on a knockout, I get knocked out and I've got maximum profit. And I go, yes, that's awesome. Whereas a call spread, I can walk away from the computer. It can go up through the ceiling. I'm not knocked out. It could eventually come back down. And that winner, which would have been locked in if I had done a knockout, could potentially turn into a losing trade because I wasn't looking. That is really important. So it does not knock you out. It offers optionality. Now, because it has optionality, the price of a call spread is going to be impacted just like a binary option with time to expiration and and volatility. So volatility and time to expiration will be incorporated into the price of a call spread. So there's going to be a premium in a call spread. All right, so that's important. So it's not delta one. It will be close or similar to, but there's going to be some premium baked into it. The further out in time, the bigger that premium is going to be. The higher the volatility, the bigger that premium is going to be. So those are clear distinctions. Some people love call spreads because they have that optionality, and it still is defined risk reward. You still know before you get into a trade what you could potentially make and what you could potentially lose, whether you're buying or whether you're selling. Again, you can sell thinking the price is going lower and profit if it goes lower. You can buy if you think it's going higher. But so a call spread's got that range. It just doesn't knock you out. Now, I mentioned this, and the very next slide, if you take nothing else away from today, and I can't say this loud enough, red alert, red alert, red alert. Whenever you're trading any Nadex product, all right, this, I cannot emphasize this enough. And the traders that we see that are more successful adhere to this and really pay attention to this. I hope I got your attention. Just because there's an expiration associated with a contract does not mean you have to wait until then to see what happens. Right? So with a binary option, yes, will gold be higher than 1700 at the end of the day? Will oil, I'm buying an oil knockout, and I bought it at $57 a barrel and I'm looking for it to go higher. A call spread, and this is actually really important, just as I mentioned before, you buy a call spread, it goes and it's profitable. It goes through the ceiling. You're not knocked out. And you're like, oh my God, what do I do? I really wish it was the end of the week already. You can choose to exit a position early. You can choose to exit a position early to either lock in profits or limit losses. So if I bought a call spread and it went up and it went through the ceiling and I start making, I'm near maximum profit, I can liquidate the position. How would I liquidate a call spread I bought? I would simply go to the market and sell it. All right. And that's true for binary options and knockouts too. Now, people look for short-term price action and binary options, and they absolutely day trade binary options. And what they might do is they might look at a longer probability, a lower probability trade. Is the Dow Jones going to be above 13,000? And they might find one where they could buy the binary option for 20. There's only a 20% chance, according to the market, that it's going to be higher than that level, which means you're risking $20. If it doesn't get above that level and doesn't settle there, it's going to go to zero. So they might buy it at 20, and then the price goes up and it goes right to the same price. It's rallied. And now, like I told you earlier, if it's right at the same price, the probability is going to be around 50. It's going to be a 50-50 proposition. The binary option would be priced around 50. Do they have to wait to see if they're going to make their $80? They could, or they could just simply sell it out at 50. You bought it at 20. There was a low probability. It went to at the money. It went to even money. You can just sell it back out and take a $30 profit and move on to the next trade. Same goes with selling. Same goes with knockouts. Same goes with call spreads. Just because there's an expiration associated with the contract does not mean you have to wait until then to see what happens. You can exit your position early. If you sold, I think oil is going lower. I'm selling oil. I sell an oil call spread or knockout. I'm looking for oil to go down. I want oil, and it does. It goes my way. It goes down. Can I lock in my profits? Yes, I can simply go back and buy back the one I sold, and I'm out of my position, and I had a profitable trade. I sell oil because I want it to go lower, but it's going higher. I was wrong. Do I have to hit my ceiling of the knockout and get knocked out for maximum loss? No, I could let it go. And if I hit the ceiling, I'm knocked out. But if I sell an oil knockout looking for it to go lower, it goes higher. I'm losing money. I don't have to have maximum loss. I could simply go back and buy it for a partial loss. You can take partial losses or limit losses. A lot of successful short-term traders are able to minimize their losses and then look to try to maximize or their gains or let them go and get what they can out of them. But a lot of trading isn't just about being right all the time or greater than 50% of the time. It's about when you're wrong, admitting it and being able to limit your losses and not always take maximum potential loss. All right, so hopefully that gives you a nice little recap of the products. I do want to get into the tools. And I do want to get into the platform. I would like to remind you, if you've got any questions, please email customerservice@nadex.com. Can't emphasize that enough. We can't help you if you're having any challenges. If you don't, let us know you need some help. 2, if you can do the trust pilot, it would be great. I would really appreciate it. If you could just take a couple of minutes, go out to Trustpilot and give Nadex a review, it would be great. And I would also recommend, remember, the Nadex YouTube channel. Every morning, 7:45 a.m. Central, 8:45 a.m. Eastern, we do Nadex morning analysis. We live stream it, and you can see what potential hotspots might be in the market for that day, which markets are hot, and maybe even a little technical analysis on levels where you might want to be looking at. We do a lot of price action analysis on, where have buyers and sellers stepped into the market before. Not a guarantee that that's going to happen again in the future, but it gives you an idea of what's out there. And now I want to get over to the tools because you can do other analysis on your own. And I'm looking at it looks like I've answered all the questions too. So I think I got them all. And if you've got any questions that I haven't, I think I got them all. If you've got any, please type them in. I'll try to take a look at them. I am now going to switch over and do what I call an off-roading session, which is show you the tools in the platform. And there we go. You should be looking at the Nadex website. All right, perfect. Okay. If you're curious, by the way, under the learnings section, you can go to webinars. All right, and I think this is always kind of good to show you. It's upcoming webinars. I've got to put some more in here, but there's also an archive. We also put everything on our YouTube channel, so that YouTube channel comes in double handy. But we recently just did last week, we had thousands. We almost broke the system. I almost ran into a problem with too many people. But we did a boot camp on how to be a day trader at Nadex. The sessions are all up here. You can review them. We did a deep dive into binary options, a strategy with binary options, a deep dive into knockouts and call spreads, a strategy for them. Using duration, when I mentioned different time frames, how to choose the right time frame for the right product, and even a bit from our colleague over at Daily FX who spoke on trading psychology. We are going to be doing these roughly every 7 weeks. We'll be mixing them up and changing them up a bit. So stay tuned. Keep your eyes open. I think the next one's going to be May 4th, and eventually you'll see that in our upcoming section. This session is being recorded. You'll be able to go to the archive and play it back probably sometime tomorrow. I've got to render the recording in order to make that happen. All right, let's get into the platform, and because I'm getting some questions. How do you choose? How do you see the different strike prices? That's what I'm going to do right now. So now, if you do not have a demo account, I would highly recommend that you get a demo account. In the upper right-hand corner, you see I am in demo. Now, while the prices are very similar to what you would see in a live environment right now, they're not going to be perfect or identical, and the experience will be different. I can't emphasize that. You're in a demo environment, you're interacting with people who are in the demo environment as well. They're doing things that they may or may not do in the live world, and there's not as many eyeballs in the demo environment. In the live environment, you've got everyone looking. It's real money on the table. That is a live environment. It's going to be very interactive, and it's going to be much more dynamic than in a demo environment where it's just people practicing and learning how to use the tools or understand the products. I'm not going to do a full-blown platform demonstration. My colleague Adam McCaden is going to be doing one next week if you want a full deep dive into the platform. What I really want to do right now, before I do anything, let me see where our timer is. Okay, good. All right, let's just take a quick peek at knockouts. I am going to, because I've been using gold, I'm just going to take a look at the gold knockouts. And I'm going to hide this, and we've got a chart, and I'm going to get more into the charts, trust me. Believe me when I say we're getting the charts, I'm going to do binary options as well. I am going to set this to a 1-hour chart. I'm going to send it to a daily one. All right, and what you see on the left-hand side of the chart are the knockout. Those blue lines give you the knockouts. When I click on a blue line, I see the floor and ceiling for each knockout. So if I thought gold were going higher and I wanted to buy gold, I might choose this knockout and I click buy because it's the closest one to the floor. And I know if I buy it, I can see my maximum loss is 100. If I bought it right here at this price, 17.30. Actually, let's put it at 17.29. I want to buy below 17.29. If I bought one at 17.29 below, if it went down and touched 17.20, I would lose $90. If it went all the way up to 17.70, I can make 410. I can place an order away. I'm gonna hit place. All right, and you can see that I actually placed an order to buy one below. Will I trade down there? I don't know, but you can place the bid below or an offer above. I could even place an order in between the bid-ask spread. But you know going in if I buy this at 17.29, the most I could potentially make, the most I could potentially lose. And even though there's an expiration associated with it, I don't have to wait for it to either touch the floor ceiling or settle in a day. If I were to buy it and it went up, I could take a partial profit. If I bought it and we're going lower, I could sell out and take a partial loss. All right, I want to get into call spreads briefly. They are going to look similar. This has only got 45 minutes to go, so it's actually going to look kind of like it. But with a call spread, you've got the range, that's just highlighted, and it tells you if you're buying or selling, it's red or it's blue. This is right in the middle of the range, all right? And the price that I'd be trading is actually pretty close to the underlying. It's similar to a knockout at this point because there's only 44 minutes to go. Not much premium in this. If I were to buy or sell, if I wanted to try to trade gold for the next 44 minutes, this would be one way for you to do that. And again, you know your maximum profit or loss beforehand. It's calculated for you. But you've just got to make a determination. If I thought it were going lower, I might want to sell this call spread. Not much to lose. And if gold were to plummet the next 45 minutes, it would be a different story. If I were buying, I might want to choose this one. So you can choose different ranges. Now, I want to spend more time on binary options. Okay. Now, with binary options, there's 4 minutes left. I'm going to show a 5-minute binary option, and then I'm going to slow it down a little bit, and I'll back up. But I want you to see, I just clicked on a 5-minute binary option, the pound dollar. I'm going to change this to a 1-minute chart because this contract settles in 3.5 minutes. All right. And I'm going to zoom in. I really want to see what's going on here. And how do you choose a level? These are the binary levels. All right. And if I click buy or sell, it's going to shade the chart where I need it to be for it to be true. Now, if I thought this were going to keep going lower, I could sell. All right, I just went to sell. I just took a short position. Did I? Yeah, I did it. I just took a short at the 137.31. And if you want to see, I sold it at 60.75. All right, now, oh, look it. I was immediately making money and it's rallying back. This is why I want you to see how dramatic these prices move around. This is the one that I sold. It was just down at 40. As it comes down, if it comes, and look at it, as the price comes down, if it comes down here, it's going to trade back. Oh, it's going higher. I'm wrong. Do I want to close my position? What do I want to do? I've got 2.5 minutes to go. It's either going to go to 0 or 100. All of these will be 0 or 100. Now, if I'm not comfortable with my risk, I can go ahead and just buy it back. And I just took my position off and I had a partial loss. All right, I sold it, and let's just take a look. My 24-hour history. Yeah, I sold it at 60 and I bought it back at, I lost $17. Now, am I glad I bought it back? Well, watch what's happening here. There's still 2 minutes to go. Oop. And yeah, it's gone up to 100. I was wrong. You know, I was right at first and I was wrong. You want price action. Look at this. This is the one that I traded. This one, when we first started, was in the 30s. It's now almost a lock. They're giving this a 95% chance in the next minute and a half. These ones up here that were worthless. So there was an opportunity in here to really, I mean, I could have bought this one here for nothing, and it's already up at, it's up above 70. Now, I don't know what's going to happen in the next minute and 20 seconds. If I think it's going to be coming back down, I could try to sell this, but it's ticking higher. Look at this. This one's now above 50. I mean, this thing's taken off. This one, which was 0. When we started 3 minutes ago, this was 0. You could have bought it for nothing. I mean, you might have paid 5 for it. I'd have to go back and look at the tape. We can go back, and if you watch the video replay, I think it was around 5, maybe 10. You could have liquidated it up, and now look at it. Now look at it. It's coming down quickly. There's 42 seconds to go, and it's crazy. This is the volatility. I don't know where this is going to go, and you see how the markets get wider or narrower based on how this moves. Now, when there's 20 seconds to go, there it was, 28 seconds to go. The prices went to 0. The prices disappeared. Why is that? That is because no one knows what's going to happen here in the next 25 seconds, and all of these are either going to be 0 or 100. All of them. And with 9 seconds to go, it looks, let's just wait and see. It looks like this one up here, which was just trading 70s, is going to go to 0. And it just settled. This one went to 100. This one went to 100. This one up here went to 0. I'm going to go back to my markets and I can hit refresh. All right. And I've got a whole new set of probabilities for the next 5 minutes. That is binary options. 5-minute binary options, very volatile. Notice that as you get close to settlement time, and some people really like this volatility, these probabilities move dramatically. And this is how I choose which strike price or which condition that I want. Now, I am going to step away from binary for the 5 minutes for a second because they are so hyperactive and they move so quickly. Let's take a look at the indices. Let's just take a look. I'll scroll down today. Let's just look at the daily Dow Jones ones. Here we go. I'm going to hide. So now, by the way, if you notice, for every settlement time, there's only 8 minutes left in these Dow Jones ones, the Wall Street 30. There are going to be a variety of conditions, and you can choose which condition you want. But sometimes it's easier to see it on the chart. So I simply click one that's around 50. Then I go, now let's make this a 30-minute chart. And let's make it for a week. Okay, so there, at least it's something. Now, you could see there are a bunch of strike prices right on the chart. There are a bunch of conditions. I am now going to, I don't want 1 hour. Let's give it, let's go to 15 minutes. That'll be better, and I could zoom in a little bit. And I'm going to spread this out, and you can see all the strike prices on the chart. God, there's so many of them. There we go. That it's difficult to fit them all. Now, there you go. So you can actually make a determination. Here we are. Here's the at the money Dow. I can see that it's currently trading 32,350, and this is the 32,353. This one's trading right around 50%. Is the Dow going to be higher than 32,353 at 2 p.m.? So this one's got an hour and 7 minutes. There's roughly a 50% probability. And if you were to buy one, you know what you could potentially make or what you could potentially lose. It's got to go to 0 or 100. Do I have to trade on these prices? No. Can I put a bid at 52 in between? Well, let's go 53. Oh, 52 is good. Place an order. There's my order. All right, you can see, and there's one, that is my one lot. You can see my one lot is bid for. Am I going to trade it? I don't know. We're in a demo environment. Someone might sell it to me, someone might not. I'm getting close. But you can bid between, and I bought it. Okay, so now you can see on my chart, I bought one. Now it looks like I'm currently losing money. That is because it's assuming that I'm selling and liquidating at the current price. All right, but I'm going to wait. Now, what can I do? I bought one at 52. Maybe if it spikes up, I'd be happy selling it up at 70. All right, I'd make 20 bucks. Can I place an order up at 70 above? I can. I'm going to place my order way up above. And if this were to go punch higher and I sell it at 70, I would be liquidating the one that I currently bought. Now, if it keeps dropping and I want to just get out, can I just go ahead and sell and cut my losses early? I can. All right, like right now, I bought it at 52. Maybe I want to sell it at 42, take a $10 loss and say, oops, I was wrong. You've got to make that determination. I've still got an hour and 5 minutes to go, but you can get out early to limit losses or lock in profits, whether you're buying or whether you're selling. And you will watch these probabilities change as we get closer and closer to expiration and as the price of the underlying moves. Right? And that is why people come to Nadex, is they're really looking for the binary options. Now, a couple other questions. If you have a demo account and you want more practice funds in there, we are actually going to be setting up a way for you to do that yourself. But if you need to replenish your demo account, you need to email customer service and they can do that for you. And yes, this session has been recorded. It will be in the webinars section of our archive. It will also be on our YouTube channel. So you'll be able to find it in either place. With that, I really want to thank everyone for joining today. We did an overview of binary options, knockouts, and call spreads. Hopefully you understand the products. We went through and I showed you how you kind of see how to trade them. You know, with knockouts, the floor and the ceiling are clearly marked on the charts for you to see where the floor and the ceiling are. And, you know, in fact, let's just kind of just do that quickly. Not only are they on the charts, but the potential profit and loss is calculated for you on an order ticket before you place an order. There we go. So, and you can clearly see your knockout levels, whether you're buying or whether you're selling. Okay, the call spreads, you see where, here, let's bring up crude oil. Why not? Just pick any one of these. All right, your call spreads, you can see where the call spread is, and if you're buying or selling, it's going to shade red or blue. And again, you've got your floor and your ceiling, but remember, you're not knocked out. You've got optionality for you to be right, and you've got to trade out of your contract or it will settle. And this one's got an hour and a half to go. And then our binary options, where you can choose from all of the, you got to choose the time frame, whether you want something 5 minutes, 20 minutes, 2 hours, daily, weekly, and then inside of each one of those, there's going to be the strike price levels, which you will see on the charts. Right? And then if you were to zoom in, you would see all of your, right, I mean, here on the weeklies, this one's trading up at 100 already. This one's trading down basically at 0 already, and the at the money is the 50-50. So, which is probably the one people would potentially trade, but this one's still got, it's a weekly one. This is Thursday, it would expire in 1 day and 2 hours. Again, if you want a further deep dive into the platform, I would say look at the upcoming tutorials where my colleague Adam McCaden not only will go through that, but he'll go through using some of the technical indicators. If you wanted to populate your charts with technical indicators, you can certainly put them right in your chart. There are, by the way, if you're not sure what an indicator is, there's some in-platform education to help you out a bit. All right, so it would help you a little bit, but you can learn about these indicators or the drawing tools. Right, so you can put your drawing tools on the chart as well for you to potentially identify support and resistance levels, and you can customize your charts in a variety of ways. I'll let you do a deeper dive into that when we do a full-blown platform session. There's also recordings of that up on the archive on our website. Thank you again for joining today. Hopefully you'll join us in the morning sessions for the Nadex morning analysis, and hopefully I will catch you later. Good luck in the markets, everyone.